First of all, I want to talk about the big topic that, is a little bit time sensitive right now, with a deadline being October 31st, and that is this UHT. Can you describe a little bit about what the purpose of this tax is for?
The sanitary version of this would be it's a political attempt to make it look like the government tries to care about providing more homes to the public.
Right.
The result has been, it's a disaster.
Mm-hmm.
Dumpster fire certainly comes to mind, but whether we agree with it or disagree with it, it's completely irrelevant.
Mm-hmm.
It is what it is, and now we have to deal with it. So in theory, it didn't get as much attention because they were initially promoting the concept that this was going to apply to foreign individuals who owned property in Canada that wasn't being rented to on a long-term basis to whomever to help solve the housing crisis. What it ended up being after they got through the legislation was a very, very draconian penalty-oriented piece of legislation that basically ensnared anyone that has a corporation, anyone that has a bare trust agreement or a joint venture agreement in a lot of cases. Well, start doing some numbers, and that's pretty much the vast majority of investors. And to enforce their strong desire to complete the tax returns, they just introduce penalties that are unheard of for the most part. And those penalties where someone fails to file as an individual, the penalties start, not end. They start at $5,000.
Mm-hmm.
Whereas with a corporation, they start at $10,000. There are administrative procedures that can bring that down and potentially to $250 in some cases. But now we're starting to rely on the goodwill of the government.
Mm-hmm. Yeah.
And again, I'm not knocking the folks at Revenue Canada. Most of them get along quite fine with they're reasonable people. They've got a job to do. They do it to the best of their ability. But like any group of people, whether we're talking accountants, plumbers, this, that, or the other thing, there's a couple bad apples in each of those. That's a lot of discretion going from 250 to 10 grand plus. And I'm not mentioning the other penalties involved with that. Just those are the starting points. And so I think as prudent investors, we don't have any choice other than to pay attention.
So just to clarify, whether it's 250 or up to 10 grand, that is a fine for not filing your return on this tax, correct? That is not the tax. That is just the fine if you don't file a return, correct?
That is correct.
Okay. So the tax is something different. And the tax, for most part, for most of us, I think, probably does not even apply. So let's start out with who needs to be paying attention to this, George. Anybody that owns property in a corporation, like you said, or a bare trust or a joint venture needs to pay attention to this.
100%, or a normal a family trust, for example, a partnership, and the partnership's going to nab a lot of people. And the legislation, again, is such that it's not just the legal reality of what exists, it's what's recorded in, depending on the particular province or territory. I'll call it the land registry system for that particular province or territory. Like when Robin and I are looking at our properties and trying to do them, quite frankly, I've got no idea for the most part what's on land registry. I know the vast majority of ours were just kind of straightforward, owned by the corporation, Bob's your uncle, off we go. There are a couple that weren't quite that way. And so often that may be done for financing purposes. And what's the difference between a partnership and a joint venture? What's the difference between a joint venture with your corporation and a bare trust agreement? What the heck is a bare trust agreement? And so when we start getting into these discussions, when the legislation first came out, it was quite clear there really wasn't, maybe I shouldn't say this, but it was quite clear to me there wasn't really somebody that was that sophisticated from a real estate investing perspective to help coach them through some of the issues that were being created here. I don't think it was their intention to have so much uncertainty. I'm not sure what they're up to now, sir. I don't remember. I think last week they were up to 15 different administrative explanations of the legislation, and we haven't even gone through 1 year yet. So it kind of gives you a little bit of an idea of the dumpster fire that's been created.
Sounds like they're still trying to figure out
They,
this
they are, in
process
fairness.
and expecting us to know what's going on, right?
I can assure you, in talking with some other extremely smart folks at BDO, and it's not different than other accounting firms either. I mean, I've read through that legislation multiple times now, along with a number of my colleagues. We can easily argue about what the intention, sorry, not so much, well, the intention is the intention, but how to interpret it. I know BDO refuses to provide some interpretations because, quite frankly, we're scared of those penalties to say whether it's right or wrong. We know it's coming. We know there's going to be arguments. We're just trying, to the best of our ability, flag as many situations as possible for the community and our clients to say, here's an issue. And we don't know what the right answer is. Here's how we best protect ourselves, in our opinion. Doesn't mean we're right. Just this is our best estimate, if you will. And I thought it was even remarkable, and I knew this was going to happen. Back when originally the deadline was April, oh my goodness, how is this going to ever possibly get done? And so then I said, okay, this is a summer project. And as most summers go, that turns into a fall project.
Mhm.
And so then, until I really went through the forms, and Robin, God bless her, she went through the forms first and tried to put kind of the draft returns together so I could review and go through in detail. I think that helps point out a lot of the inadequacies of the legislation and whatnot. But again, at this point in time, we're 2 weeks away. We don't care about whether the legislation is right, wrong, or bad or good.
Yeah,
How do we comply with it so we don't have penalties?
yeah, yeah.
Or, heaven forbid, pay the tax?
Absolutely, absolutely. Okay, so where do we go from here? Let me ask you a question. If I own a property personally, it's not in a corporation, but I own it personally. It's an investment property. I rent it out. You know the story. Is this a property I need to file for?
Maybe.
Okay. Okay.
And so, great answer, right? Kind of expanding on the maybe part to it is to say, if you're 100% certain that on the land registry, Corey is the individual owner and Corey is a resident citizen of Canada, then wonderful. You're in good shape. But what if Tiffany's involved? And wait a minute, is it a joint venture? Is it a partnership? Is it a bare trustee in favor of a corporation? Or is there other joint? Is George involved with this? So maybe Corey and Tiffany have half of it and George has half of it. Oh, we got to start digging through these things and to figure out what's in land registry. At this point in the game, which is really my answer back in February, by the way, I'd be filing something. I don't want to be arguing 3 years from now whether I was right or wrong and talking about not only this year's penalty, but next year's and the year thereafter, because there's, like, I shouldn't say zero chance, virtually zero chance. Revenue Canada is heavily auditing the first year. They're going to wait 2 or 3 years and audit 2 or 3 years at the same time. So that $5,000 penalty turned into 15 grand, and that 10 grand turned into 30 grand. Now they've got some leverage, and they've got our attention, of course. And so the less attention they have of mine, the better off I am, of course. And so I want to get something filed.
So the overwhelming feeling I'm getting from you, George, with this is, regardless of our situation, regardless of how the property is owned, it's probably smart for us to just file something.
I think in a lot of the rentals and whatnot. Now, again, for I'll use Robin and I as the example. I'm abundantly confident my personal residence is straightforward. I have no problem. I know, well, I'm not even on the title. It's just Robin's property, so I live here as a guest of hers, apparently. But anyway, so I know Robin owns my personal residence 100%, and we're good with that. But the rental properties, again, some of these we've owned for 20 plus years. Ours are corporate, so that makes it a little bit easier for us. So I just by default know I have to file something. But I do know we had a couple that were done with Bear Trust from a financing perspective. And I'm 99% sure that was all cleared out years ago. But am I 100% sure? Not really. So why not file something just to be safe?
Okay, so let's just quickly talk about the process of filing. Okay, so obviously I can call up my accountant. In this case, I would be calling up you, George, or your team, and I can say, hey, help me with the filing on this. I'm sure all accountants are dealing with this at this point that have investors and are probably fairly busy with this. If I want to just do it myself, is that possible?
It certainly is. And I think it's what the majority of our clients are doing. Right now, admittedly, while I encouraged everybody to do it in the summer, I encouraged myself to do it over the summer. So I'm not trying to pretend I'm innocent. I'm just as guilty. I didn't do it. Literally, we're going through the final versions of those returns this week to get them off, and our objective is to have those complete this week. But back in February, March, it would have seemed a whole lot smarter to do that during the summer. But again, that's spilled milk at this point in the game. I know in talking to our UHT team, we've got dedicated folks that are just, that's all they're doing right now. I've been assured it would take an act of God to do more returns or to get more in there. So people are going to have to do some of these themselves, and so I'm assuming, I don't know this for a fact, that other accounting firms are going to be in similar positions. The forms themselves are, relatively speaking, straightforward in terms of the amount of work required to them. It's a thought process to say, or what exemptions are applicable. And I think for the vast majority of investors, there's going to be a couple of boxes that if they can tick off in the sense of box 620 or box 625.
Hear
in
that,
t-
guys?
yeah,
Box 620, box 625. Okay.
keep those in mind. I think the vast majority of my properties, and I think investors, they're going to be ticking one of those two boxes. There's going to be exceptions. I'm not trying to pretend otherwise, but I think the vast majority will hit one of those two boxes, and that will be their exemption to basically say, I know I had to file a tax return, or I think I might have had to file a tax return, but I don't owe any money. And so the the box there relates to, I am a specified Canadian corporation. The other is a specified Canadian trust. In both cases, basically saying there, in the case of the trust, there are no foreign beneficiaries. And in the case of the corporation, there are not greater than 10% or 10% of foreign beneficiaries involved in the ownership of that company. And that's going to get them through for the most part. So again, it's going to be to say, here's the return. You maybe file it. I may not be happy with it, but that's a political discussion of this, that, and the other thing that is completely irrelevant. Here's your return. I don't owe you any money, and I'll see you next year.
Okay.
And sorry, there's going to be there's parts to fill out in the sense of your name and address. Obviously, the government's interested in the property, and they're going to look for the roll number, like in terms of depending on each of the provinces and territories, I'm sure does it slightly differently. Effectively looking for a detailed, as you would see in a legal purchase and sale agreement, description of the property address, the normal address, 123 Queen Street type of thing. They're going to ask for the value of the property, which in most cases is what the provincial authority suggests your property is worth for property tax purposes.
Okay.
It is not what the valuation from a financing perspective says it is. It's
Okay.
not reality. You have an ability to elect at that reality number. Most people, one, don't need to do that. And two, the deadline is long past in terms of getting the valuation done for that. And what was the most recent purchase price of the property? But again, for most people, they don't have to pay any of the tax. So really the numbers are irrelevant.
Right.
Whether it's $1 or a gazillion dollars, it's still going to be a zero as long as the return was filed. And mention kind of some of the different penalties and whatnot. So one thing maybe I can just, now that I find myself talking about it.
Yeah.
So there's the October 31st deadline, but there's also a December 31st deadline.
Okay.
And this is not a good deadline. This is a worse deadline in the sense of, okay, so we miss October 31st. We've got some bad penalties. December 31st brings additional bad penalties.
Okay.
And those bad penalties, kind of in layman's terms, will potentially mean we no longer qualify for the exemption with respect to calculations of penalties and whatnot. So in other words, some of the penalties are based on the amount of taxes owing, and if we can't qualify, in other words, we have to pay theoretically tax onto it. That's what the new penalty amounts are calculated on. So by not filing by I encourage everybody to file by October 31st. But if you can't do that, at least file by December 31st, because if you miss that one, it gets even more expensive.